Very good morning from London. Welcome to the RANsquawk European morning briefing for today, the 16th of August. Starting off then with the German GDP data coming in at 0.1% versus the expected 0.5%, so slight weakness there in the German GDP that did weigh across the Eurozone, Euro and equity markets, getting sold quite significantly on the back of that, especially the basic materials and industrial sectors suffering in the equity space. We did see some bids come into the fixed income under the back of that also. However, following that, later on in the session we saw the release of Eurozone GDP, came in weaker than expected but only by 0.1 percentage points, where money market participants were expecting a flat or negative reading, so we did see a bounce in sentiment on the back of that. Elsewhere, we have seen the ECB security market programme back into Spanish and Italian bonds on the secondary debt market. That has been affecting the 10-year government bond yield spreads there, the Italian spread performing much better than its Eurozone peers. Just worth of note that the French spread is wider this morning, with particular focus on French banks back into the market, with any potential knock-on effects to the French sovereign from any expanded EFSF programme. Looking on towards that then, the focus will fall on the meeting between President Sarkozy and Chancellor Merkel, expected for a press conference around 5:30 London time. There has been some commentary from Germany's Bofinger, key economic advisor to Merkel, saying that she may go in the direction of Eurobonds. We'll be keeping a close eye on that and any further developments regarding Eurobonds or changing sides of the EFSF. Moving back towards the currency space then, we saw some good data out of some inflationary data, higher than expected CPIs out of the UK that has helped support cable there and the general sterling currency across the board. We've also seen some weakness in the Swissy after some earlier strengthening of the Swissy overnight in some risk-averse trade. However, there was no fundamental reason for the weakness in the Swissy. Looks to be just some intervention jitters there. Also worth of note, the dollar index has been strengthened this morning. There was the news out overnight that the PBOC had set a high yield for its one-year bond, which is generally seen as a precursor for any rate hike there. However, some analysts from UBS have debunked that theory, just saying that the PBOC is looking towards some more attractive paper there. Looking towards the rest of the session, the key will be this German Chancellor and President Sarkozy meeting in Paris today. And following that, there'll be a raft of data out of the US, particularly the building data there. But that's enough from me. Have yourselves a great trading day.